like we're talking about small cap, after the sharp correction now in mid cap and small caps, how you should investors approach these in 2026? Do you think large cap will continue to perform, or clients should start focusing on mid cap and small caps to start nibbling?
So I think that, so I would put it this way, it depends on the risk appetite of the investor. So I would not like to give a one solution. I'll tell you why I say this. Is that if you now sit down and look for the new year, we don't know what new negative surprises are going to come. We have no idea about that. But we know that what positives can happen. The positives that can happen is that a trade deal can be signed over the year. The timing of it is what is uncertain. Whether it'll happen before March or maybe June or maybe second half, we don't know. But I don't think that we can go another 365 days without a deal being signed, because all the noise about the deal is positive. It's just not getting signed. So if I say that it's going to happen sooner rather than later, right? On the back of that trade deal, right? If there are enough positives from India from the trade deal. So the second aspect is, how will the trade deal actually find out? Will it be perceived as pro-India, or has India given up too much to America? So that's the second aspect. One is the deal has to be signed. Second is the deal itself has to be perceived to be good for the future growth of our GDP, right? That's the second part. When that happens, FIs will come back, right? Now, contra to what people think, that when FIs come back, I actually expect small caps to outperform. I wonder why. Because DIs have been buying those large caps that FIs have been selling this year. So when next year, whenever FIs come back, I expect DIs to sell their large caps to them and then shift that to mid and small cap. The reason they didn't do that this year was the valuation. But since there has been a reasonable correction in the small cap segment, they are now more closer to value. They're not still undervalued. They're closer to value, but if you look at the fact that the other thing, like I said, the other positive that I expect is the full year impact of the GST and the rate cuts. Because the rate cuts occurred through the year, the GST cuts occurred in the last quarter of the year, right? You will now next year see a prolonged impact. Like, for example, consumer durables like refrigerators and air conditioners did not see an uptake because they are sold in the summer. So the impact of the GST will be felt in consumer durables in the summer. Similarly, real estate hasn't participated in this whole GST cut, rate cut story at all, because there's been a supply issue. Because there are not enough affordable housing projects launched by developers, which next year will get set right. So I actually expect that also a positive. When that happens, it will be the mid and small caps which benefit from that.